Hello guys, glad to have you on board again. Today we'll start as usual by flushing the cryptocurrency sector as we still need to have additional information to take a rational decision out there, even though we might have some interesting technicals at play right now, as the market is still trying to play that compression in terms of momentum, and that the divergence we've been highlighting in the previous days might be kind of searching for validation. As we said, that candlestick is kind of interesting as it was breaking both the highs and the lows of the previous day and was highlighted to be oversold. So we said what's going to happen after that candle might be somehow usable for those who absolutely want some very, very aggressive trading strategies, which is even more aggressive than what I would take personally. But for those who absolutely wanted to speculate, I thought something could be made out of this. And apparently the market is taking it as granted for now. As long as it remains a support area, the market has been trying to break this. We already broke the highs, still haven't installed a daily candle close above that high, so it's still, I would say, risky to just get in this thing. But if we were about to make this, let's say, daily candle close above those levels, would be kind of a good sign, because if we just have a look at the overall volume structure we have out there, clearly we've been trading that area a lot, which means at some point we're just going to flush all the resistances, which means we won't have volume resisting that price area. And we can clearly see in terms of volume appreciation, this is where we've got the breakout, where we've got the confirmation that the bearish trend is over or turning about to be over. And as long as we remain below those prices, it just says the bulls don't take it over. So still risky to go lower. And at that stage, we're just waiting for that breakout to occur. So until we manage to make it, I would suggest remaining cautious, but as I said, for those who absolutely want to be speculating in that market, then I think a stop loss can be placed below that low, but at the only condition that we handle to sustain a daily candle close above that market top. Until we manage to do this, I'd say still a lot of risk playing that dangerous game, as this could just be kind of a retracement before going to lower lows. The trend channel is bearish on an overall bearish trend channel as well. So until we manage to extract from that price area and rise the momentum to reach out for that area in which we may have the breakup, double breakup, because we could break out that channel and search for this one, which is the highest time frame one. So until we manage to really validate and give strength to that market, really, we need to remain in a buy and hold situation. To me, speculation out here still remains very dangerous, but those who absolutely want to make it, I say, okay, kind of a green light at the only condition that we manage to hold a candle close out there. Obviously, same thing goes for Ethereum. As long as we maintain the $200 area, we're pretty much fine. The dollar is showing some signs of weaknesses, or potentially heading toward weaknesses, which generally tends to support crypto prices. So we'll see if we have some kind of a dollar-based ground support building itself out here, or if the dollar is just showing some short-term weaknesses that will just lead to mid-term breakups, and then in that potential we might see some more bearishness in the cryptocurrency. So I would say kind of right now, as the crypto itself is not doing anything, we might just have a signal coming out of dollar. So you might want to have a look at what the dollar does in the next following days and weeks, and we'll obviously talk about that in the forex market right away. So we'll compare dollar to other and standard currencies, no cryptocurrencies, but I think we can now set them in the same basket, as currently we have very low volatility on the crypto sector, which means we can really pretty much consider it as a viable currency like any other ones. As the volatility has been dropping down, it really is behaving like other currencies, normal fiat currencies. So I suggest we switch right away to the forex sector before heading into the stock market, even though we have a lot to talk about, because obviously Apple's been showing the earnings results, and it's disappointing the market, and it has some reasons, even though we're going to talk about that afterward. So let's head to euro-dollar, major currency pair, basically the one that sets the dollar price, because this is where most of the volume is trading between the two major currencies. Yes, obviously yesterday held the candle close pretty strong bullish engulfing pattern, validated today by breaking the candle's high. So yes, obviously dollar found some kind of bottom in here. Problem is we've got the NFP today, and the NFP is strong, is showing some strong dollar, but the question is who is expected to rise faster than the other, because euro currency has been undervalued for quite some time because of weird ECB last meeting, but in the meantime we also had inflation numbers which were showing strong inflation in the euro area, which is problematic for the ECB's current policy. They might have to be a little bit more aggressive, and on that stance it simply blocked the euro from breaking supports. And dollar is strong, but the market is pricing it already. So question is, regarding other currencies, is it going to maintain strongness and that kind of safe haven demand? I don't really think it that way, and in that perspective, I think we're going to just set ourselves into that wider range we've been talking about, into euro-dollar, which basically thinks to me that this is where we're going to find some strong resistance, but this is strong support as well. So we're going to kind of oscillate in between before, I think, in the overall global scenario, I think the euro is going to take over dollar, which means dollar may remain strong, but as other currencies will be stronger, it will just lose its value, its relative value to them. So it's still to come. It's further away from now. So at the current stage, I would say probably we're going to hold that support for at least a short period of time, testing some resistances, but I don't see many chances to have a resistance out here. Most likely building a range with a resistance, support, and just breakout area right in between. So I expect, yes, some weaker dollar in the next few days regarding major currencies, and question is, are we going to consider cryptocurrencies as major currencies as well, and see them rising against the dollar, and see the BTCUSD rising in that perspective? So it's something I'd like to see happening in the next following days, and as so far it still remains highly speculative, but those who want to play, I'd say okay, as it suggests the dollar might be showing some weaknesses ahead. Same thing goes for GBP USD, same thing goes as well for USD yen, who is showing some, it might be trying to make some reversals today, as obviously the NFP has been helping, as we have some attempt to retrace on the US indices. But the problem is we've got Apple, and Apple's been disappointing the market. You know, it's in every fucking ETF sold out there. You know, there's a lot of ETF that are showing prices starting to decline, which says, okay, we might have panic selling if it's accelerating because of Apple. So we'll see how today's trading session will be. It's going to be important because it's going to be the last one of that week. We're going to see the weekly candle closes as well right away. So we need to talk about other few things first. So USD MXN showing some strong reversal as well, breaking the lows. We'll see if we can manage to hold the candle closes in there, or if NFP is some kind of supporting prices in a short term, just a time for us to build a range in here. But I think anyway, that breakout pretty much seems like a range breakout to me, and nothing close to a breakout that will lead us to new highs. So I'd say probably we're going to hang up in here for a few days, and then probably going to have to bearish reversal in here, and shortly but steady installing the bearish trend afterwards, kind of a repeating of that strong trendy movement, but in a deeper perspective, as this time we might be able to break down major support, this one, and probably I think this one in a row. Basically reinstalling a copycat of this one, but with probably a steeper pace when we'll get to break down support, because in that perspective, now this time, we'll have the trend traders with us. They weren't really in there, but I strongly think this is a trend trade. So those who've been trending back then kind of expect a replicate of this, kind of a first leg and second leg to the downside. So pretty much, I would say that breakout, very low probability to see some follow through, and probably something that's going to be wrong-footed with very attractive selling prices. As selling in here just requires a stop loss in here and gives some pretty nice rewards. So I suggest that many speculators will try to jump in that train, and we'll see if this one is performing in the next few days and weeks. So it's something to watch out for. It's still speculative stage of those trades. So really don't go leverage in here. It's just putting some money in here, dipping a toe, and try to taste temperature and see if the market reacts to this or not. AUDNZD as well is showing some weaknesses that concerns me somehow. We're still having some bullish patterns in here, suggesting we must remain bullish in here. But so far the market is trying to go in sideways as expected. It's just waiting for that sideways action to terminate and hopefully to break it up by the to the upside and manage to finally fuck up that bearish trend line to make sure that this market is regaining some strength. Problem is right now NZD is showing some strength, but the AUD isn't. So it kind of slows down the pace, as I would have liked to see a market V-shaping structure in here. So we kind of have that V shape, but it really is losing that momentum, and I would like to see the market just, at best, staying in that range, but I wouldn't necessarily like to see the market breaking it down and returning to that V-shaped structure. I'd like to see, yes, eventually losing the bullish momentum, but I don't want to see the bearish momentum taking over. Would be a worst sign to me, because if that's the case, I might be lowering the leverage in here to eventually buy in the major trend channel. But I just think this is range price action in here. Consolidation. We've been consolidating deeper than what I was expecting. As basically to me it was buyable by then at that stage, but as you can see right now we're still holding that price as support area. So I would say, okay, as long as it holds on, I wouldn't necessarily be concerned, because now we're basically having some kind of bullish momentum signal. It's just the market try to break through it and fail it as we build that structure, strong reversal structure, we gap down and the market bought it instantly on a V-shaped structure. So in here, support area, as long as we don't make candle closes below there, I wouldn't necessarily be concerned about a potential reversal. I would say more likely ranging in here until we manage to break it up. And whenever we'll have that on the charts, then we'll be confident enough to go fully leveraged for a nice bullish burst to come afterwards. As we've been making two waves to the upside, I suggest the next one is going to be the trendy one. And therefore, it should last for few quarters and show some pretty nice breakups, as we'll probably break that area, that one as well, and probably this one also. So question remains about the dollar. I think AUDNZD is the only scenario that is completely aside of it, which means we don't really give a shit about the dollar when it comes to AUDNZD. So this is the only scenario I would say I still have a lot of confidence into, because dollar is the problem right now, but we don't give a shit about that when it comes to theirs. Before we move on to indices, we're going to have to talk about the gold. So yeah, strong reactivation on the gold yesterday as well, kind of reactivated by the weakening dollar and instantly retraced up to the previous resistance. Question is that bullish signal going to be lasting or not? All we have right now is an oscillator signal from momentum, which is not that great, even though I would suggest that this might be kind of tradable somehow, because we've been rebounding as well right on the trade line. So it didn't really trigger a momentum pattern out here because it was too close from the previous taking profit. So I would say maybe some range price actions to be expected in here. I don't think we've been refueling enough to break that resistance already. So I would say don't jump in there with both feet, because we might have some retracement and some sideways action like we had back then. But I think we're not going to have a bearish outburst like we had previously. So I wouldn't necessarily expect something to occur like that with a bearish breakdown before breaking up. I think that was possible back then because we still had doubts. Right now, I think the doubts are really narrowing. So you might just... It needs to be included in the money management that we could eventually make one more pullback to that bullish trend line. But the question is, I think it's not going to be the case. We might see a steeper pace, so it might be ranging for just another few days and weeks. But it shouldn't be more than that. It should be just something close to this, as we should be fastening the pace in here and building, something like that. So the way I would say, I would actually give you that trick. So you just take those highs, okay? So you take the pace of the previous highs, you bring it down to the previous lows, you build some kind of expectable trend channel. I would say the market's probably going to buy this. So ranging in here for a few days, just a time for us to catch up with that speculative trend channel, as we've been setting the pace by those highs, but we might need to consolidate a little bit further before getting into the actual trend trade. trend trader is going to break that 38% Fibonacci and probably trend trade us right to the 61s. So as I expect us to go straight forward in this one, in these price areas, this is kind of the dome zone area between 38 and 61. I'd say there's no one who's going to be interested into selling that mid price. So probably going to go straight line 38 to 61. So it might be normal for us to kind of accumulate a bit in between. So that's a suggestion. Obviously, if the breakup occurs, I'll be ready to get into it. I'm buying gold for sure. But the question is, I've been taking partial gains in here. I have been putting some money back in the market in here, but I'm still not fully confident in here, so not yet fully leveraged on the gold. And I would say playing some sideways actions for a couple more weeks might be something to expect before actually getting a nut burst in here. So same thing I kind of expected to the euro dollar as well, kind of ranging price action in here before actually managing to show some weaknesses on the dollar. So it's not going to be a switch, an instant switch from yesterday. We're going to have to digest both the strong euro and the strong dollar to assess who's going to win the battle, and then I think euro might be taking over. But in order to get that, we need to have a stronger words from the ECB, far from what Draghi's been telling us the last time he's been talking. So I say now the market is waiting to have some stronger words coming out from the ECB, and I think it might just wait for a few days to get that, wait for that trend channel to kind of accelerating its pace to the upside, and whenever we'll have that breakup, I'll be ready, confident to basically play that trend trade out of rebouncing in here and heading to the major channel in which we're going to secure the gains, but certainly not reversing here. I'll remain bullish, but just in here I'm probably going to take 75% off the table for a sideways action as well before getting into higher highs, I think, afterwards. So now, going to stock market. We're going to talk about two things today. We're going to talk about Apple, we're going to talk about Xiaomi for the Chinese market, and then we're going to review the equities indices, but first we're going to talk about the shares themselves. So Apple right now is trading pretty low. So this is what's happening on the after hours. So obviously the results came in, the earnings, they're disappointing the market for reasons I was obviously showing to you and talking about for quite some time. I said the iPhone numbers will obviously disappoint the markets, but it's even worse than that. Now, as they know the numbers are going to get worse and worse in time, Apple just decided not to release them anymore. So it's basically, okay, we know that the iPhone numbers are going to turn, so we're no longer going to show them to you because that's bad for us, and we're not going to show you what's bad. Obviously, we're going to show you what's good, so we're going to give you more details into where we're making actual profits, which is service selling. So yes, obviously, Apple managed to still make reliable profits, but the problem is you do sell services at higher prices, but you do have a lot of competitors out there, so you're not the only one selling services, and I don't expect services revenues to keep on rising if you're selling less products, because selling less products says basically you're gonna have fewer clients, and fewer clients just basically says if you want to maintain the same revenues level, you basically have to sell more stuff to fewer people. And I don't think Apple is able to do that. I think Apple just going to maintain its revenue for a few quarters. Maybe next quarter is going to be good as well. But I think in the end, they're going to lose their market shares to Xiaomi, which we're going to talk right after. And Xiaomi is good as well into selling services. So Xiaomi is kind of the cheap Google, the cheap Apple, but the very great done job into making a cheap Apple. So what would you pay for something that was half the price for the same services? So Xiaomi is just keeping its pace to rising interest from the customers. And the thing is that those customers generally comes out of fucking Apple, and they don't want to get back to it. When you tried Xiaomi, and I personally did, I mean, seriously, I've been having iOS back then. I've been having iPhones, been having iPad, been having MacBook Pro. I basically had all that fucking stuff. But I switched out of it a few years ago when I thought prices were just surging for no reason, as it wasn't giving me the innovation coming along. So no innovation and rising prices. I basically got my fuck out of here. And now I think other people are just doing the same. They say, okay, you know what, you're rising prices, so fewer users, pricier products. Basically, when you have competitors in a maturing market, it's not going to end well. And I don't expect Apple to rise its revenue in the future. So falling revenues with a very, very pricey share just basically says we're going to have a drop, and I think it's going to be happening pretty soon. So I don't know if it's today, tomorrow, or a few quarters from now. All I know is that probably in a year from now, Apple's going to be pricier. So regarding this, I'm more likely to be a short seller than a buyer. So I stay on that momentum right now, as today I really don't know what to expect. Either the market is going to collapse, or those who bought are going to hold. They're going to say, okay, you know what, I'm holder. I'm not selling because we've got bad numbers. And if they are trading it that way, then we'll see. I mean, if the market managed to retrace all that up, then basically I'm out. It says the market is strongly bullish, but if it falls in from here, it will just be that the holders are wrong, just like they were wrong back then in Bitcoins. The market will go lower with volume, and people will just keep on thinking we're going to go forever. And that's the worst case scenario. When you got retail traders who've been basically buying because they thought it will go higher, something that is really too much expensive, and it's just going to keep on falling just because it's a psychological pattern. Everybody wants to see it rising with an unexperimented trader playing that game, and basically it's going to end up ruining those players before rising again. So it will say falling, then dead cat bouncing, and the question is, to me, as a retail, if I put myself into a retail trader, unexperimented retail trader's position, I would say, okay, you know what? It's falling, but it's acceptable. So I'm buying and holding. I'm not selling today. Obviously, I'm not. So question is, if we don't break the resistance, if we just hold the prices in here today or tomorrow, and if we keep on falling the next week, what are you going to think? I don't think we're going to fall right away today. I think today we're going to try holding those prices just to keep on holding the hope. Hope is necessary. It's just we're going to switch from hope. It wasn't hope. It was the latest sentiment was euphoria. We basically were there, and people were already expecting $250 for Apple. It was easy. We're probably going to gap up 5% and rise another 10 to 20%, and we'll be in $250 in just a few weeks from now. It was all planned, all easy money, so lots of people have been trading this. Okay, shit, today they're already losing 7%, and I think that's just the beginning. So we'll see how it goes, but I see huge problematic things in here. Says that basically I think we're going to hold in there today, but we're going to keep on falling the next following weeks and days. And the question is, if we fall, what are we falling for? We're falling for a reason. We're falling to fucking chase the stop losses. So those who've been buying in here, where do you think they put their stop losses? The most aggressive ones have been putting the stop loss below that low. So we'll obviously get there, obviously, in a few days from now. I think that's the first stop. But will we stop in here is a question. I don't think we will. I think we're going to keep on falling lower, test the gap. We'll obviously find some buyers in here. So are we going to buy in here? No, I don't think so. We're going to have hopers thinking that we're going to buy and do this. But we won't. We'll probably do this, sideways action for a few days, digesting that bullish demand, and fuck it all on a verticalized move. We're going to accelerate the pace. I don't expect Apple to just fall in a straight line from here. We're going to work our way down, but I still think we're going to go down. So now think, those who are holding in here, okay, they will say, okay, no problem, I'm holding in here, no problem, got bullish support. So a few days from now, we're going to be heading toward $250, no problems. Still, hope is necessary. And then we're going to switch from hope to fear, and from fear to panic. Okay, this is where, think about that. We're trading psychology in here, so fuck up all your technicals. It's not going to play like that. We're going to play psychological patterns. So now we have doubts, but doubts that will probably going to lead to a hope whenever we reach out to support area. So we're trading a support area. Obviously, what you're seeing today all across the Twitter things is that, Okay, the numbers are not that great, but they're not bad either, so hope that we're going to rise again. If that hope is fading, we're going to have hope again on the next support level. Big gap, last time we've been there, Apple was strong, so why wouldn't it be strong again? So obviously we're going to be hoping in there. And this is fear and panic. So where do I want to buy Apple? In here. This is where I'm going to buy. You see, now zooming out. Where do you see the lowest amount of volume? Is in here. $155. This is my target for Apple. It is approximately 38% from market top. I would say, personally, out of 30% drop, I would probably going to reduce my leverage. So in here, I'm probably going to secure lots of my gains when fear is going to get into that market. But I'm going to keep on a few shares because I think we're going to reach out to panic selling. And if we go panic selling, you can be damn sure we're going to reach out to the lowest amount of level of demand we have, because this is where we're going to have a lot of stop losses. Because those who will really hold, they would say, okay, if we break down those levels, means the market is collapsing, and this is where they're going to be stop lost. In here, they're going to be panicking, buying the high, selling the lows. Worst case scenario. And obviously, this is where I want to rebuy myself as a short seller. So as a short seller, these are the prices I'm heading to. So we'll see how it goes. I don't expect this to collapse today. What I want to see today is just a gap to hold. I don't want to see the market filling that gap. And if it fills it, I want to see a bearish candle close. Meaning I don't want to see the market filling the gap and closing above 50% of the candle. If that happens, I would probably reduce my leverage in here, just because I will have to be more cautious, because we're probably going to need to range a little bit more in here. Okay, but that's just it. I remain bearish, and I think now the psychological patterns are about to trigger. We've got more than what we need. We've got bearish catalyst. We've got reasons to fall, but everybody thinks they are not reason. They are trying to rationalize something that is, by definition, irrational. We've been creating a bubble trading. If it's about to burst, it's going to be stupid. It's going to be irrational, but everybody will try to rationalize it, just as they done back then with Bitcoin. So please don't make that mistake. If it falls, be aware that it was planned, and I don't see any reason for this to change. Now we're going to have to talk about General Electrics, who keeps on falling today, and we're testing for support. So as we do, I want to see the market rebouncing on that support area. I've got a breakdown over here, so obviously the market is selling what's weak and buying what's strong as usual, but that's the stupidest way of thinking those things. So I would say holding in here is probable for General Electrics, because we're on support volume in here. We're going to have to return back to 2009 prices in here, so probably going to find some short-term support, kind of rebouncing. And if we do that, the next supports below those prices in here, we can see two strong support areas. I want to buy those, but at the only condition that we manage to find a low in here today. So today's session is not something I'd like to trade, just something I'd like to see how the market responds to it. So we'll talk about that in the next few days, next week probably, and we'll see if the market is holding that price or not. If it doesn't, then not good. It means we'll have problems on General Electrics. But so far, I'm not really fearing more than that. I think that breakdown in here is an exhaustion breakdown, meaning more likely something that is going to build a range. So we're going to build and have a range breakout in here, suggesting that we can place some stop loss at 7, and we're probably not going to reach out those prices, because I don't think the range is going to be this. I think the range is just going to be that. As you can see, we've been building a support in here. So I would say this is a probable range. Option number 2, and that's a possibility, we'll have that bigger range. And if that's the case, then we're going to reach out to $7. But reaching $7, you can be damn sure I'm going to buy, and I'm going to reinforce buy and holds. But I don't think we're going to do that. I think we're going to rebound in here and find some support near the below $9 per share. Is going to be an interesting price to get ourselves into tiny but steadily getting back into speculative entries. I remain into the buy and hold scenario. Nothing has changed so far. But if we do build that bigger range, means we'll have bigger targets as well in the end. It's just simple as that. I think we're going to reach out to those price, but if we're building that bigger range, means the targets will be there. So anyway, we'll still have a lot of potential on those trades. So the short-term weaknesses is nothing I'm concerned about. It's really a long run, and I've been clear about that. Those trades will deliver in probably 2, 3, or even 4 quarters from now, and we might have to suffer some negative return at the beginning of the scenario. That's part of it. That's how you do buy and hold. You shouldn't fear if we go negative at the beginning. All we care about is for the scenario to complete. And then we're going to have to talk about Xiaomi, who's been reactivating 10%. Apple's falling, Xiaomi's rising, and that's kind of normal and expectable. So we'll see about that, but I still think that we're going to keep on heading this way, and I see no reason for that market to reverse. So it's just we're going to build some baselines in here, probably a wave one kind of scenario. So we'll see. It's range trading, so generally we rise in 2 waves, so I would expect that wave to keep on rising. But as I've been missing it, we're far from interesting prices to speculate on, so I would just not do it. I'll let it go for that wave, as entering in here is way too risky. If the market is still bearish, you're just going to buy a resistance and the market will chase your stop loss right after. If the market is bullish, you're going to keep on rising, finding that major trend channel and reversing it. But in that perspective, that's the way I'm going to trade this. I wait for the market to reverse the long-term bearish trend, and then I'm going to buy the pullback in the blue area, which is basically how we generally do range trading. We rise, we support, and we fuck it up to cross all over the range. So this is the next move I'm going to try to catch up with, as I just missed this one stupidly, but that's how it is. We've seen that double bullish signal in here. I just decided not to take it, and now it's too late to get in that train, so I'll just wait for the next stop. Now in terms of global assets, so we're going to have a look at the cash indexes out there. All right, so seeing this, we're trying to trade previous day's highs. We're going to see if it holds or if it doesn't. It's hard to say. It's hard to tell. What I basically say is that the market is trying to recover. It's doing as hard as it can. I think we're going to install a few prices above those resistances. But basically, we're going to have to face strong resistances near that 76.4% retracement. So in that price area today, strong sell to me. So I'd say above 7,137 or 38. I would say it's a sell. So in that price area, it's a first sell. First speculative sell is not going to be the reversal price, but I expect the market to try to grind its way up probably a couple more days. This is what I would expect in terms of price action. Okay, sideways action heading in there, and probably in here we're going to find the selling entry when that bearish trend channel is going to lower next week. So I would say next week we're probably going to make higher highs, but for a short period of time, and we're going to find some sellers and we're going to fill that gap. So this is the trade I'm going to take, selling in here, securing in here, and then what will come next is still to come. So either we make an ABC retracement, and we're going to try making the dead cat bound structure, and I'm going to try selling that price again upon signal only, or right from here we keep on falling, and we try to rebound, but we found some strong resistance in here and we fall again to make new lows. So that's the second option. Basically depends on Apple, I think, because if Apple shows some weaknesses, it's going to bring down some ETF volume with it. And we're going to talk about that next week. Okay, so in terms of volume, I would say today is important just because of Apple. So Apple's trading today is going to be interesting, but that's all it is. I mean, if it managed to retrace up to resistances, that's possible. But if it closes above the mid part of the range, you can basically consider this to be mid part of the range is in here or in here. So if we manage to make daily candle closes above $218 per share for Apple, I would say, okay, you know what? Bulls are too strong, even though I think we might test those prices. All I care about is for them to reject to bearish. And anytime, what I care about is for the market to retrace back to that low. And whenever we'll do this, it's where doubt is going to pour in and lead us to the next support. So I don't know if it's going to happen today on a surgical bearish move, or if we're just going to try to hold things up in here just to maintain hope. You know that when you do trade those patterns, those crashing patterns, you need to have psychological behavior first. Beyond technicals, you need to have traders in a specific mindset. I think right now, they're showing the risk, and I don't want them to see the red flag. We just need to maintain a sustainable level of hope, so those who bought won't release right now. I want them to sell at the lowest possible prices. So it's like when you short play, when you do poker playing, you have a strong hand, and you want to make sure the guy in front of you is going to rise you, so you're going to take as much as you can from that person. It's kind of short play the hand as much as you can is what I do right now. I want the market to show some strength as much as possible, so the guy in front of me is going to rise, even though I've got probably the strongest hand in the table. I'm going to take the money. But I think short playing the hand right now is the most reliable way to get the biggest amount of money from my opponents. So I kind of want to see the market holding today, but I don't want it to make a bullish close, okay? I don't want it to reactivate bullish. Just want to maintain some doubts about not too much bearish, but not too much bullish. I want something in between will be good enough. And then slowly but steadily next week heading into lower lows, but not crazy minus 15% lower lows. I'm going to do it step by step, and just the final step must be vertical and panicking. And when you see this, people saying, okay, Apple is not going to rise ever, that's the timing you want to take out your selling entries. All right? So for now, don't be panicking as sellers. It's not what you're going to have to, the market will try to make you doubt. To pour doubt into your head. So if you were selling, you should be pretty damn confident right now. What we have is great for us, but it still requires patience, because it's not going to be a win situation instantly. It's something that we're going to slow play until we get to the actual final reward. But the final reward is gonna come right at the end of the scenario. The V-shaped structure is gonna be the final stage, and it's far from being today. I expect the market to fall step by step in a final collapse, and that's what I like to see. So you have to build yourself into that mindset. It will still require patience. We've been patient we've been really patient on Apple, so you have to work this out a longer time, okay? It's going to require more patience. So play that, slow play it, be patient, and whenever the actual reward will come, you'll be pretty happy with it, and you will have learned a great lesson, which is being patient and trading psychological patterns. So that being said, I'm going to leave you guys on that. I remain dangerously bearish. I think the danger is still at play in U.S. equities as long as the VXN hasn't broken above the 38 level, which is to me a necessity. So I think we're going to head toward that price, and probably not higher than 43. So in that area, you want to take your profits on bearish positions on NASDAQ. So if you're still bearish on NASDAQ, be aware that we're nearly reaching the ends, but I think still an unexpected bearish drop to expect in the next few weeks.